Before we dive in, the standard disclaimer. Investment in the securities market is subject to market risks. Please read all related documents carefully before investing. The information we're sharing today is for educational purposes only and is not investment advice.
All right, let's get into it. Today, we are putting three absolute giants of India's power sector under the microscope: Tata Power, Adani Power, and NTPC. We're going to go head-to-head to figure out which of these titans might be the best long-term addition to your portfolio.
You know, with India's energy demand just exploding and this huge national push towards renewables, the power sector is, well, it's absolutely electrifying right now. But here's the thing. Each of these big players is taking a wildly different path. So the big question is, how do you even begin to pick a winner in a market that's booming this much? Let's break it down.
And to understand just how big this boom is, look at this number. The Indian government is pouring a staggering 12.2 lakh crore rupees into capital expenditure. That's a massive amount of fuel being added to the fire, supercharging the country's infrastructure. And guess which sector is sitting right in the heart of all that growth? You got it, the power sector.
So let's officially meet our contenders. Each of these companies has a completely different vision for powering India's future, and getting a grip on their unique strategies is absolutely key for any investor.
First up in the ring, we've got Tata Power, and if you had to give them a nickname, it'd be the Green Transitioner. Their whole game plan is built around this incredibly aggressive pivot into renewable energy. We're talking everything from power generation to manufacturing solar panels and even building out EV charging stations.
In the opposite corner stands Adani Power, who we'll call the thermal powerhouse. While everyone else is talking green, Adani is doubling down on what they do best, building and running massive, highly efficient thermal power plants. It's a bold, contrarian move.
And our third contender is NTPC, the stable Goliath. As the government-backed giant in the room, its name is basically shorthand for reliability. For decades, NTPC has been the bedrock of India's power supply, and that stability is its core strength.
All right, let's get down to brass tacks. It's time for round one, financial strength. We're going to pop the hood and take a hard look at the numbers to see which company is standing on the most solid financial ground.
Okay, this scorecard tells a really fascinating story. First, let's look at earnings per share, or EPS, basically how much profit the company makes per share. Adani Power is the clear winner here, miles ahead. Next up, operating margin. Adani leads again with over 30%, meaning they're keeping more of every single rupee they earn. And finally, check out the debt-to-equity ratio. Adani's low number here, below 1, suggests a much healthier and less leveraged balance sheet. Now, NTPC's numbers are solid and stable as you'd expect. Tata Power, on the other hand, has higher debt, but that's because they're spending big to build out their green energy future.
So let's zoom in on Tata Power's valuation for a second. This chart shows its price-to-earnings ratio, which is just a fancy way of comparing its stock price to its profits. As you can see, it's been on a bit of a roller coaster. But right now, it's trading right near its historical average. So what's the takeaway? It seems the market thinks its price is, well, just about right, considering its past performance and its big future plans.
Okay, a healthy bank account is one thing, but what investors really care about is what's next. So let's get into round two, future growth. This is all about each company's master plan to power India's tomorrow.
When it comes to the green energy race, it's really a two-horse competition between Tata Power and NTPC. Look at these goals. Tata Power is aiming for a jaw-dropping 70% of its entire portfolio to be clean energy by 2030, and NTPC is right there with them, targeting a massive 60 gigawatts of renewables by 2032. These are not small promises. They're huge, ambitious goals.
And Tata Power is going all in. They're not just building over 10 gigawatts of new green power plants, they're also building the entire ecosystem. They're making their own solar panels and batteries, and they're rolling out a massive network of over 5,500 public EV chargers. It's a complete top-to-bottom green strategy. Adani, meanwhile, is playing a totally different game. They're betting that for the foreseeable future, India is still going to need reliable traditional power, so they're adding over 13 gigawatts of new thermal capacity. Their strategy is all about locking in efficiency. Over 80% of their power is already sold through long-term contracts called PPAs. Think of those as guaranteed paychecks. Plus, since they control their own coal logistics, they can run their plants at peak capacity, making them incredibly efficient.
NTPC is playing the middle ground, taking a diversified, all-of-the-above approach. They have a huge 30-gigawatt pipeline that cleverly balances new renewables with their traditional thermal strength. But here's where it gets really interesting.
They're not just sticking to what they know. They're pushing into the future, experimenting with things like green hydrogen, floating solar farms, and even exploring small, modular nuclear reactors, all with the government's backing.
Okay, we've seen the strengths and the growth plans, but every investment has a flip side. It's time for our final and maybe most important round, the risk factor. Let's see what challenges each of these titans is up against.
So if we were to put these three on a risk scale, it would look something like this. On the low-risk end, no surprise, you've got NTPC thanks to that government backing. In the middle sits Tata Power. Their big green plans have huge potential, but also carry execution risk. And then, on the higher risk, higher reward end of the spectrum, you find Adani Power.
Let's dig into what those risks actually are. For Adani, it's all about volatility, the fluctuating price of imported coal and the unpredictable prices they get for selling power on the open market. For Tata Power, the big worries are potential payment delays from state-run distribution companies and, frankly, the massive challenge of actually building all these ambitious new projects on time. And for NTPC? Well, their stability is also their biggest risk. Because their prices are set by regulators, their growth can be slower compared to their private peers.
All right, the moment of truth. We've weighed the financials, we've looked at the future, and we've sized up the risks. So, what's the final verdict? Which of these power players is the right fit for your portfolio?
The truth is, there's no single best stock here. It all comes down to you and your investing style. If you're an aggressive growth seeker, the go big or go home type, then Adani Power's high-risk, high-potential return profile might be your play. If you're a balanced investor who cares about ESG factors and wants to be part of the green energy story, then Tata Power is probably calling your name. And if you're a conservative investor who values stability and just wants to sleep well at night, while the government-backed NTPC with its steady dividend is your safest bet.
But you know, maybe the real winning strategy isn't about picking just one. As this quote from Phenology suggests, a blended approach might just be the smartest move. It's about creating your own dream team, combining the safety of NTPC, the green growth potential of Tata Power, and maybe a tactical piece of Adani Power's explosive potential. That could be the key to balanced, risk-adjusted returns.
And that leaves us with the ultimate question for the long term. As India powers into its greener future, which strategy is going to generate the most powerful returns? Will it be the bold, revolutionary pivot to clean energy, or will it be the relentless, efficient muscle of thermal power? The answer to that question is going to be a fascinating story to watch.
One last time, investment in the securities market is subject to market risks. Please read all related documents carefully before investing. Everything discussed here was for educational and informational purposes only and was not intended to be investment advice.